In today's video, we are continuing with our enlightenment, keeping you well informed and getting it right in your business and having the right knowledge and applying the right knowledge into your business. So we're a professional consulting firm, the audit accounting firm. We are rooting for your business and we can support you, we can be your business support partner, act as your outsourced accountant, as outsourced CFO, then your external auditor, your tax consultant, your business consultant, and your compliance consultant. So I'm Oluwatosin, I'm a chartered accountant, and I'm the managing partner of Done Consulting. So in today's video, it's very important. We are bringing you accounting terminologies that business owners need to know. We'll be projecting it very soon. It was this richest man in the world that said accounting is the language of the business. He made a whole lot of money in accounting, in investment as an investor. He made a whole lot. It's Warren Buffett. Yeah, he made a whole lot of money as an investor, and he gave us a powerful quote that accounting is the language of the business. And if you have the right language when you are doing your business, definitely you are going to succeed. You are going to succeed if you communicate the right language into your business. The strategy, you put the right thing in place, you comply to the necessary laws and regulations, and you lay a very strong and good foundation for your business. And your accounting books, your books are intact, are in place. Your financial structures, everything's are in place. Definitely, you get it right. Get it right in your business, and that is why we are rooting for your business, because you should get it right. When you get it right, it will be all good for you. So come along with me in this video. So accounting terms or terminologies that business needs to know. You need to know it. You need to have a good knowledge of it. Have a good knowledge of it. That's why we are here, to also help you in all your business compliances. So as you can see from the projection, practical list of accounting terms every SME owner should understand. You must understand it. First thing here is profit and performance terms. In accounting, right, there's what we call reports, right? Of course, you don't just arrive at your reports. It's your documentations, from your source documents to your journals, to your ledgers, to your trial balance, and then you have your final account, which is the accounting reports that you will now be having or using for decision making. And there are three very important financial reports or financial statements that you must know. Your profit or loss account, which we call income statement. Your balance sheet, which we call statement of financial position. And then your cash flow statement. You must understand it. And when we serve as your external consultant, you also accounting service, of course, you will know all of these things, and we implement it for you the best way to work for your business. So for profit and performance terms, we have revenue and sales. What is revenue? What is sales? It means your total income from selling goods or services before expenses. So this is the income that you generate that comes into your business from issuing invoice to your customer. So the money that you make from the primary sales of goods and services is what is called revenue or sales. Then number 2 is cost of sales. The cost of goods sold minus that's COGS. Cost of goods sold, we call it COGS. So cost of goods sold means direct cost of producing goods sold. The goods that you sold, it is what we call COGS. So cost of goods sold. And example is materials, direct labors, and other, payments that you make for goods and services. Then number 3 is gross profits. What is gross profit? It is revenue minus cost of sales. Revenue minus cost of sales. And that cost of sales is the cost of goods sold. So gross profit shows how profitable your core business is. So revenue minus cost of goods sold will enable you to know how profitable your core business is. Then number 4, we have operating expenses. It means running costs like rent, salaries, fuel, internet, advertising, and all of that. Administrative costs, operating costs, expenses, all those things are called operating expenses. Then we have net profit. So it is the profit after all expenses, interest, and tax has been deducted. So meaning that we have 2 sets of profit, gross profit and net profit. The gross profit is the profit that you arrive at before deducting your operating expenses, while net profit is the profit you arrive at after you have removed all associated expenses in your business. And this will also help you, right? When you understand this and you keep the proper books of account to know how much tax you are going to pay, whether you'll be paying if you are within the threshold or you will not. If you'll be paying, definitely you are outside the threshold. But if you are not paying, that means you are within the threshold, and keeping the books of account will help you to know that. Then number 2, we have cash and liquidity terms. Very important for SME. Number 1 here, which is the continuation. Number 6, cash flow. What is cash flow? Some people confuse profit with cash flow. They are not the same. Cash flow means movement of cash in and out of the business. And this cash flow, we have cash inflow and cash outflow. Cash inflow are the money that comes into your business, while cash outflow is money that goes out of your business in form of payment to suppliers and payment to other stakeholders. You can be profitable and still have cash problem. We'll give you an example of that. Example, you sell goods to your customer on credit, 500,000, and the cost of that goods is 300,000. You have profit of 200,000, but there is no cash in your hand. So that's why you need to understand cash flow very well. Number 7 continuation is working capital. Working capital means current assets minus current liability. It shows ability to run daily operation. So it is the money that is used for the daily running of your business. If this is not available, there will be problem in running your business on a daily basis. So you need to get it right. So number 8, we have current assets. It means assets usable within 12 months, within a year. Example is cash, inventory, receivables. So inventory are your products, your stock, while receivables are the money you are expecting from your customer on the sales of goods and services. Number 9 continuation here is current liabilities. It means debt payable within 12 months, within a year. It is the opposite of current assets. So examples are suppliers, short-term loans, and other obligations that you need to meet or make payment for. Then number 3 here is assets and capital terms, which is the continuation of number 10. Assets. What does assets mean? It means everything the business owns and uses to generate income. Everything the business owns and uses to generate income. It means what you possess, what you have that you now use to generate income. For example, if you have motor vehicle in your business, you can use to generate income. You can use it to go and deliver products to your customer. So motor vehicle is an example of assets that you own. So under this asset, we have what we call non-current assets, which people normally know as fixed assets, or we call it non-current assets in accounting language. So non-current asset means long-term assets like buildings, the motor vehicle I just mentioned, and then equipment, and some other ones are also non-current assets. We have what we call depreciation. Depreciation. It means spreading the cost of a fixed asset over its useful life. You spread the cost of that your non-current asset over its useful life. For example, you have a motor vehicle that used to generate income or revenue in your business, and you bought the motor vehicle, for example, let's say 10 million, and you from your depreciation policy or your company policy that this motor vehicle will serve us for 5 or 10 years. So the depreciation will now tell you that spread the cost of this motor vehicle for this period of 10 years that you are going to use it to. That means on a yearly basis, you will be having 1 million that you will save to replace that motor vehicle in the year of expiration, that it will not be in use again. Then we have number 13 continuation here as capital. Capital means money invested by the owners into the business. The owners, you as the business owner, the entrepreneur, the money that you invested into that business is what we call capital. And then drawings. Of course, you have invested money into your business. Occasionally, you might want to take money out. And that money that you take out for your own personal use as business owner is what we call drawings. So it is money taken out by the owner for personal use. Number 4 terms here is liability and debt terms. Which is continuation of number 15, with liabilities. What business owes to others is what is called liabilities, and we have current and non-current liabilities. 16, we have trade payables, amounts owed to suppliers. The supplier of goods and services, you need to pay them. So the amount you are owing them is what we call trade payables. Then 17, loans/overdrafts. The money that you borrowed funds that you must pay with interest, either from banks or from other stakeholders or partners in the business. Then number 5 terms here is net worth and financial position, which is continuation of number 18, net assets. Net asset means total assets minus total liability. All your assets, both current and non-current assets, less total liability for both current and non-current liability. So it shows the business net worth, your net worth, your real value. For example, they can say, okay, Elon Musk from the list of richest man in the whole world. He is now maybe like $200 billion net worth for Elon Musk. So that net worth means is total asset less total liability. This is net worth. Then we have number 19 here as equity. Equity. What is equity? It means owner's claim on the business, same as net worth. It means the same as net asset. It's the same thing as your net asset. So that is the owner's claim on the business. Then number 6 terms here is records and reporting terms. Your record, your reporting, which is the continuation of number 20. We have statement of profit or loss. This statement of profit or loss is part of the 3 key financial reporting that we told you earlier on. We told you income statement, balance sheet, that's statement of financial position, and cash flow. So the first one is statement of profit or loss. It shows your profit or loss for a period. This is where you know whether you are making profit or you are making loss in your business. It is very important that you keep proper books of accounts to be able to have the right report of profit or loss. Then 21 continuation is statement of financial position, which we just mentioned. It shows your assets, your liabilities, and equity at a point in time. So that is what statement of financial position means, which we call balance sheet. Then 22, trial balance. So it is a list of your ledgers, all your ledger balances used to prepare accounts, from all your bank's accounts to your suppliers, to your trades payables, to your customers, to your receivables, to your diesel expenses, to your salary. All the ledger balances is what is called trial balance. Then we have ledger, general ledger. This is the main accounting record for all transactions. So the ledger is the principal book of account. It is the main accounting record of all your business transactions. So everything that you do in your business is your ledger. Number 7 terms here is tax and compliance terms. We have 24 continuation as VAT, value added tax. What is value added tax? It is the consumption tax charged on eligible goods and services. We have withholding tax number 25. It's an advance tax deducted at source on certain payments. Before you pay your suppliers, before you pay your contractors, you must deduct withholding tax. If they are individual, you must remit to State Internal Revenue Service. If they are corporates, like limited, you must remit to FIRS. Then 26 here is CIT, that's company income tax. It is tax on companies' profits. It is a tax on companies' profits. There's a way it is being calculated. So if you want to know your CIT, what your company will be paying, of course, if you serve as a tax consultant and external auditor, you're going to be having all this information from your business audited accounts. Then we have payee. It is a tax deducted from employees' salaries. It is from employees' salaries that you make payee payments. That is, you remit the payment. So all your employees, all your staff, you must remit what we call payee for them. And before you can remit payee, they must have their tax ID. So if you serve as your tax consultant, you're going to be doing all of this for you. Then number 8 terms is key ratios SMEs should know. There are some ratios that you need to know, which is number 28, gross profit margin. What does it mean? It means gross profit divided by your revenue times 100. What is revenue to gross profit? That's what it means. Our revenue, what is the ratio to the gross profit? That is what gross profit margin means. So that you know how well you have performed on your gross profit margin. Then we have net profit margin. Your net profit divided by revenue times 100. The ratio of revenue to net profits, where you will know it. Then we have current ratio. Current ratio means current assets divided by your current liabilities. We have told you that current assets means what you own in your business that you can use within a year. And then current liabilities means what you are owing other people that you must pay within a year. So above 1 is LD. If you divide current assets by current liability, you need to have above 1, because that is what will be LD for your business. So the golden rules for SME here is that profit is not equal to cash. You may make profits, but you are not having cash in your business, and there will be problem of working capital. Then sales don't mean profits. You sell, it does not mean you make profits. If the cost of goods is even more than the sales, there will be problem. Then assets don't mean wealth unless debts are controlled. So if you have assets and your debts are even more than your assets, you don't have wealth. It's a problem for your business. Then good records, good record keeping the proper book of accounts for your business equals to easier loans, lower tax rates, and better scalability. So this is what we are bringing to you at this time, and you must ensure that you apply it into your business, because we are rooting for your business and you must get it right. So we are Precision Consulting. You can reach out to us on all your business compliances, from CAC, which is the foundation of your business, to your tax registration, tax compliance and tax services, to your accounting books of record, and your business development, implementing technology into your business. You can serve as your business compliance consultant. So feel free to reach out to us and make sure you are compliant. So until we meet again in another video, as we are counting down to the end of the year, make sure you stay compliant in readiness for the new Nigerian Tax Act for 2026, which is coming up in 1st of January. And we also believe that you have put all your payroll in order to comply to the Nigerian Tax Act, which is 1st of January 2026, is taking effect. So reach out to us and we'll be willing and ready to work with you. So stay compliant and bye for now.